Oh my gosh, I tried to get a mortgage, but the bank said, yeah, there's nothing we can do to overcome it. John, I've got income. I make money and I can't count it because I don't report it on my taxes. We can figure out a way to make it happen. This story is a recent client of ours who has an ITIN. What that means is we kind of label it as they have an ITIN, which is a true statement. An ITIN is someone who does not have a social security number, but the reason they don't have a social security number is because they are not residents of the United States. They are not citizens, they're not permanent residents, and they don't have a residency card. They don't have any form of residency. What they have is what's called Employment Authorization Document, an EAD, that gives them work authorization to work in the United States. But because they don't have any citizenship, they're not, or permanent residency status, they're not issued a social security number. Now, somebody with an ITIN, they can open up credit, they can pay, they're working, they're paying social security, everything is legitimate. They just have a different version of a social security number called an ITIN, and they've been locked out of home ownership for quite some time. Well, it's now become pretty common that people can buy homes with an ITIN, but it's really difficult. The programs are hard to qualify for. You need larger down payments. But a lot of people pool together and they work with family members and they get gifts from people. The problem is a lot of these programs are designed to restrict some of those things and say, no, you can't get gift money. And so a lot of lenders who say they do ITINs are very, very, very restrictive. We're pretty liberal on our ITIN program. And so the story starts with a buyer who they own a catering company. And so their income is not easy to prove, which meant that we couldn't use their tax returns because, well, if you got a good CPA, your tax returns aren't going to show your real income or your real profit because you're able to write things off. You're able to structure things to give you tax advantages that you wouldn't have, that you would have to pay a lot more in taxes on if you didn't do that. So it's normal. Yet the problem is what showed on their tax returns wasn't enough income to qualify them. And so we switched over to a bank statement loan, which allowed us to count the deposits going into their bank account. But lots of companies do bank statement loans. The problem is they just simply say, well, whatever you deposit in the bank, then half of that money becomes profit because the other half we consider to be expenses. And we use that standard, but we have a lot more flexibility on explaining why your expense ratio is lower. As an example, if someone does, now this guy, he's a catering company. He sells products, the product being food. But if you don't sell a product, if you're a consultant, well, then we say, well, gosh, you're going to have a lot less overhead. So we can count a lot more of your income towards as profit. And so we can more easily use more income out of the bank statements than the average lender. So we got this guy qualified and we end up at the point where we have to prove his rents. And the problem is we couldn't prove the rent because, well, he's buying, by the way, from his landlord. And so he pays the landlord in cash. And we couldn't prove the rent. Well, the problem is that we won't believe an individual landlord, we'll only believe an institution. And we especially won't believe the seller because the seller's not gonna tell the truth. Like if you're not paying your rent on time, the seller's gonna tell us you pay it on time because, well, that truth would stop them from accomplishing their goal of selling you the home. Yet we couldn't get proof that he was paying his mortgage on time. And at any other company, the deal would have died right there. But we asked for an exception. And they said, okay, well, there's gonna be a little bit of a bump to what the risk is on the loan. And so it's gonna make it a little bit more expensive in fee. But aside from that, you're granted that exception, no problem. So we get to the end of the process. And unfortunately, the buyer had spent a little bit of his money that we had left over. And we ended up not having enough money for the required reserves. You're supposed to have a certain amount of money relative to your new mortgage payment in extra money in the bank. Now, he's got a lot of money that moves in and out of his accounts because he's a business owner. The problem is every mortgage company simply looks at the end of the day, how much money do you have in the bank? And in this case, he didn't have enough money in the end of the day. And literally, I'm like, okay, well, the deal's dead. Like, there's nothing we can do. We have to wait until he gets more money. We have to figure out where it comes from. And just on a whim, I decided, you know what? It doesn't hurt. Let me send it in for an exception. Let me send it in to see if they'll allow us to qualify with less money left over in the bank than what is required. Literally 24 hours later, we got an approval. These are the kind of things that we can do. So if you're in a situation where you're saying, oh my gosh, I tried to get a mortgage, but I ran into one of these hiccups and the bank said, yeah, there's nothing we can do to overcome it. Especially if you're already doing one of these non-traditional types of loans, don't stop there. Because every bank has to typically go to a different source for their money. And it's that other source that sets the rules. And so it's impossible for them to ask for exceptions and get them very often when they're not the decision maker. My company is loaning you money that we have sourced. We set the rules. And therefore, when you make the rules, it's your right to break the rules. And we often break our rules. And that's exactly what we did in this case. And this person is now a homeowner, beautiful home, beautiful family in a brand new home. Why? Because they asked, can I qualify? And we said, yes, you can. And we delivered. If you think that this is something that could apply to you, if you think you're in a situation where John, logically, all of it lines up. Like, I'm not talking about you have a 412 credit score and no job. Logically, I'm sorry, you can't buy a home. But if you think logically, John, I've got income. I make money in tips, but I can't count it because I don't report it on my taxes. We can figure out a way to make it happen. There's lots of options that we have. If you're an Uber driver, any number of things. So continue to tune in, listen to different videos that I've got on different topics and different stories as we grow this channel. And I really appreciate the opportunity to serve you. As I want to make clear, I'm interviewing for the job of being your lender, whether it's you or someone you feel that you can refer to me. I would love the opportunity to take great care of them. Thank you so much for listening and have an absolutely wonderful day. Bye-bye.